This isn't just about how to invest and get rich. You can actually learn from the great investors about how to think.
William Green, author of Richer, Wiser, Happier, shares the wisdom he's learned from some of the world's most successful money managers.
Funding provided by Clearbridge Investments, the Fairholme Foundation, First Eagle Investments, Bill Miller, Baird, Strategas Asset Management, Research Affiliates, Royce Investment Partners, Seafarer Capital Partners, and Women Investing in Security and Education.
Hello and welcome to this edition of WealthTrack. I'm Consuelo Mack. Numerous books have been written about great investors, individuals who have beaten the odds in the markets over long periods of time. They have always been a rare breed. By some telling, they are now an endangered species. Longtime guest Charlie Ellis, who wrote the classic Winning the Loser's Game, has told us many times that in today's highly competitive, heavily researched market, it is nearly impossible to have an investment edge, let alone keep one. Morningstar's latest report on actively managed funds versus passive index funds highlights how difficult it is. According to Morningstar, just 21% of active strategies survived and beat their passive counterparts over the 10 years through June 2025. Yet there are always exceptions, and those are the ones this week's guest has recently written about. He is William Green. He is the author of Richer, Wiser, Happier, How the World's Greatest Investors Win in Markets and Life. Now, it recently came out in paperback. It's being translated into 26 languages, and the late great investor Charlie Munger called it one of the best investing books ever written. In part one of my conversation with Green, we discussed the investment approaches of the 40-some exceptional money managers he has interviewed over the years and what he learned from them. The episode is available on wealthtrack.com. This week, we are focusing on the life lessons, the personal habits and qualities of great investors. I asked Green, is there one character trait they share?
I often think of the greatest investors almost as practical philosophers. I think about this great line from Charlie Munger where he said, "I observe what works and doesn't work and why." And there's something about them. They're almost agnostic about everything. There's this kind of free-thinking openness to just whatever works. And so for me, they became this incredibly helpful filter because they don't really have any dogma, because you pay an enormous price for dogma and extremism in investing. And so they're just looking at anything that works in life. So if meditation works, if Zen Buddhism works, if understanding your emotions and studying behavioral economics works, they'll study that. And so for me, I think that kind of open-mindedness is extraordinarily powerful. And I guess the first time I ever realized this was back when I was interviewing Bill Miller, probably around 2000 and 2001. And right after the World Trade Center was blown up, I was traveling with him for several days. And at the time, the market was just getting absolutely crushed. And he was just buying tech stocks left and right, which everybody hated. And the market had literally just had its worst week, I think, since the Great Depression. And one of the things he was doing at the time, which fascinated me, was he had built a 15% position in Amazon. He'd literally bought 15% of the company at a time when the stock had fallen from 90 to 6, and most people thought it was going to go bankrupt. I was talking to Bill about his intellectual basis for this, and he was saying it all came down to his study of philosophy, because he'd been a PhD philosophy student at Johns Hopkins. And so he was drawing on philosophers like William James and was saying, well, actually, James is obsessed with the way that we misperceive reality because of our biases. And so he would say, for example, he would get me to read this 1898 speech from William James called On a Certain Blindness in Human Beings, which was about James going once to, I think, the woods in the mountains of North Carolina and seeing some hut that he said looked like an ulcer. They had ravaged nature. They had just destroyed nature. And he said, then one of these mountaineers comes up to him and says, well, actually, this is a triumph of the human spirit. You don't understand this at all. You're seeing this entirely wrong. That this is a guy who, in the middle of this really rough territory, has created a home for his babes and his wife, and it's a beautiful triumph of perseverance and strength, resilience in the face of nature. And so this sort of philosophy, just looking at your biases and saying, well, actually, I'm looking at this all wrong, it had this enormous practical effect on Bill. So Bill looks at Amazon and he says, well, what is it? Here are all these people saying, well, the dot-com bubble just burst. Here's a company that embodies everything that's worst about the dot-com bubble. You know, this money-losing business. This guy, Bezos, has become a billionaire from this money-losing business. And Bill looks at it and he says, well, no, it's not that at all. He says, actually, what it's doing is it's deferring gratification by taking its profits and sinking them back into the business, investing in the business for the long term. And I was talking to Robert Hagstrom the other day, who was working with Bill in those days. And Robert said to me that when Bill first met Bezos, he said, what's the business model? And Bezos said, it's Dell. Basically, this is a company with unbelievably high returns on capital because we don't have to pay for these books even until 6 months after we receive them, right? And so Bill was saying we have a competitive advantage, a financial advantage that's concealed by the short-term earnings, by the short-term pain of the company. And so I looked at that sort of thing and I thought, this is just so beautiful that this way of drawing in a multidisciplinary manner on philosophy, psychology, and applying it to investing just seemed very thrilling to me. And at the same time, I was with him one day when we traveled to his alma mater because he was giving a speech, and he calls the office and just to check in. And he had just bought a company called AES, an energy company, I think, the day before. And they said on the phone, well, it's missed earnings estimates massively, and it's plummeting. I think it fell 50%. So here he is, he's lost $50 million, and it's not even lunchtime. And he just says, let's just double our bet. And so it's just this awareness of behavioral psychology, for example, that because of the findings of behavioral psychologists, we know people overreact to bad news. And so, and they feel the pain of loss twice or 2.5 times as intensely as the pleasure of gain. And so Bill was able to take these lessons from different fields and apply them to investing. It made me start to realize, oh, this isn't just about how to invest and get rich. Mm-hmm. You can actually learn from the great investors about how to think.
Bill is extraordinary. I know him quite well. He's just got a first-class mind. And when I think of some of the other great investors, would you say that same broadness and that same kind of brilliance and perception really applies to the vast majority of them? Of the
no, not at
40-plus
all.
individuals? I don't think it does either.
Not at all. And some of them are not big readers. I remember once interviewing Peter Lynch, this many years ago, probably 25, 30 years ago, and asking him what books he would recommend. And it was pretty clear that he didn't read much. And he said, you're much better off actually playing bridge or poker, these games that help you to understand probability. Mm-hmm. So I think you can make an enormous amount of money by not being a polymathic reader. But I think for people like Bill Miller, it's been an extraordinary competitive advantage. And Munger as well. I mean, Munger, who would talk a lot about building a lattice work of mental models where you're taking even an idea of the margin of safety, right, comes from engineering. So Buffett would talk about building an enormous margin of safety when you build a bridge, for example, so that it can take immensely more weight than you actually have planned for it to take. And so he applied the same example when he was buying something like the Washington Post company, where he said, look, it was valued at something like, I think if I remember rightly, $85 million at a time when he said there would be 10 buyers who would buy it for $400 million if they knew how much it was worth. So he said, you're not looking for a small margin of safety, you're looking for an enormous margin of safety. So I think this ability to take mental models, heuristics, to use the sort of highfalutin word, from rules of thumb from different disciplines is very, very helpful.
As far as life lessons, are there personal habits that they have that you emulate and that perhaps we should emulate? I always wonder about how great investors spend their time, how they organize their days, how they organize their lives.
I write at some length about what I call the art of subtraction, which is this ability in a dopamine-filled world where we're constantly bombarded with messages and notifications and news and the like. What the great investors are doing on the whole is actually subtracting that noise. They're tuning out the noise. And so one thing that Nick Sleep and Kay Sakaria, who ran the Nomad Fund with extraordinary success, one thing they did is they set up their office actually above a Chinese herb store on the King's Road in London, totally away from Mayfair and the City of London, the places where there was this sort of money flowing around with tremendous velocity. And it was such an eccentric office that literally when I went to visit them there, they had their beekeeper suits hanging from the wall. And Zach didn't even have a desk. He had this sort of lazy boy chair. And they had set themselves up so that basically they were just focusing on these super long-term questions, like, what's the best business model? Are businesses like Berkshire Hathaway and Costco and Amazon going to reach this incredible destination? And so they would just spend their whole time reading, discussing business models, traveling to go see companies. And they had physically structured their environment so that it tilted the odds towards them playing this game sensibly. So they took their Bloomberg terminal and they put it on a low side table. So Zach said, at a certain point, you would say, ow, this is hurting my back if you sat next to the Bloomberg too long. So what they were doing is tilting the odds in their favor to say, well, we're looking at information with a long shelf life, not all this ephemeral information, not all the wiggle guessing. So this has had a huge impact on me because I think, okay, if actually in a world where everyone is hurrying more and trying to do more, if actually I can do the opposite and move a little bit slower and be more thoughtful and construct a lifestyle where I'm doing deep learning, deep work, I'm going to have not only a happier life, but actually a more peaceful life.
Does integrity matter for great investors? Is that a trait that you have noticed among great investors?
This is something I've thought about a great deal, right? Because there are people who've been absolutely rapacious, who've done incredibly well and made a fortune for themselves. And that's clearly fine. But I remember talking to Charlie Munger about this and saying, you always talk about the power of integrity, and yet we have these people who've made an absolute fortune while behaving terribly. And he said to me, look, I went to Harvard Law School with Sumner Redstone, who's very powerful, an immensely successful guy. And he said, Sumner Redstone made a lot more money than I have. So you could say Sumner Redstone was the successful one. But he said, all my life I've used him as an example of what I didn't want to be. He said, even his wives and children didn't like him. I've never met Sumner Redstone. What do I know? But I think it's a really important thing to consider is to look at your life and say, well, not just did I win the game, but in what was the manner of victory. And I feel like someone like Charlie Munger took immense pride in the manner of his victory. I remember him talking at one point about a snuff company. It was a tobacco company. And he said it was the best deal that he and Warren were ever offered. And he said, this company, you just couldn't lose. It was unbelievable business, unbelievable returns. And he said, we turned it down. The person who bought it was another famous billionaire family, made something like $3 billion over the next few years. And it was an incredible investment. And he said, did we regret that for a minute? He said, we never regretted it. He said, going in, we knew that this was a product that could cause cancer. And he's like, why would our life be better for having those extra billions of dollars? He's like, our lives would have been worse. And so there's a lovely phrase in Buddhism where they talk about the joy of non-remorse. And I see that with several of the great investors, someone like Ed Thorpe as well, when I said to him, do you have any regrets when you look back at your life? And I think he was 83 at the time. And he said, I don't regret any of the principled decisions that I made. I thought that was a really fascinating insight that someone, an extraordinary game player like Ed Thorpe, who figures out how to win the game of life, is stressing the fact that he has no regrets about any principled decision that he made.
Do they apply those same standards to their family life, to their social life?
I think they almost can't help it in many cases. And there was a moment where Monish Pabrai, who was very close to Charlie Munger, where Monish went to Charlie's house and he shot a video where he said, Charlie, how did you like William's book? And Charlie was like, yeah, I loved it, great book. And he said, were there any insights that you found particularly interesting? And Charlie said, yeah, how many of us got divorced? And I think there's a real downside here, right? Which is the sort of people who are incredible at being unemotional when it comes to investments. There's a sort of difficulty often in connecting with other human beings. But I think one of the things that became very clear to me is that certainly the wisest of the investors all understood the importance of good relationships. So when I said to Charlie, what can we learn from you and Warren Buffett about how to have a happy life, not just a not just a hugely successful life, but a happy life, he immediately started talking about relationships. And he said, Warren has been a marvelous partner to me, and I've been a good partner to him, which I thought was an interesting piece of phrasing, that he underestimated his role in the relationship. And he said, we have a very simple strategy with relationships. He said, if you want to have a good partner, be a good partner. And he said, similarly, if you want to have a good spouse, deserve one. Mm-hmm. And so I took this as the wisdom of a guy in his 90s who'd made plenty of mistakes, who'd been divorced before, seen a lot, sort of distilling this practical wisdom in a very powerful way. And that had a really important impact on me, because I started to think, okay, so if I want to have a rich and happy life, I actually need to really focus on my relationships. And I think for a lot of us who are very driven, whether as writers, journalists, investors, business people, or whatever, we tend to neglect family and friends. And I think one of the things that I learned from Munger is, okay, so if to have a good partner, you have to be a good partner, then to have a good friend, I actually have to be one. And so I think I've started to invest more energy in that.
And I'm wondering, again, life lessons, have they created lives for themselves that enable them to do the kind of deep work that they do professionally, but also live a life of meaning and of reflection? Is that something that is a common characteristic of them as well?
I think you get at something hugely important here. In the epilogue of the book, I was really looking at what does the money really do for you? The thing that I see again and again with the great investors, many of whom are multi-billionaires that I've interviewed over the years, is that it allows them to have this independence where they live in a way that's aligned with who they are in all of their weirdness. And so in some cases, they're deeply idiosyncratic, right? But they're able to construct a lifestyle that's true to who they are. And so I think of someone like Irving Kahn, for example, who I interviewed, I think when he was 108 years old. And here's a guy whose idea of a happy life is to continue commuting to his Midtown Manhattan office well after he's turned 100, because he loves solving problems and serving his clients and working with his son and grandson and the like. There's something really beautiful about that. Similarly, I think with someone like Tom Gaynor, right? He's set up his life running Markel, where he loves having a team. He loves his family. He likes creating an organization that in some way is a kind of iconic organization because it behaves with integrity and the like. And for me, this also has had a real impact on my own lifestyle, because I don't think you have to be vastly rich in order to set up that kind of lifestyle. When I see the investors I admire most, I feel like they're living with a deep sense of alignment. I felt this very strongly when I went to Omaha for the Berkshire meeting this last time. And there was when Buffett made his announcement that he was retiring, I felt like, oh, he finally actually did become the sage of Omaha. There was a sense in which he sort of became what we always thought he was. And there was kind of something deeply beautiful about the way he shared the information with all of us at the same time as he shared it with Greg Abel, the CEO. He really became this very remarkable figure, a kind of moral figure. And so I think part of what you feel with Buffett is this sense of alignment. And he talked a lot to, these two friends of mine, Guy Spear and Monish Pabrai, had a $650,100 charity lunch that they had with Buffett many years ago, I think back in 2009 or 2008.
Which you write about in the book.
And one of the things that had the biggest impact on them is that Buffett talked about living by an inner scorecard. One of the things that was so deeply impressive about Warren and Charlie was this sense that they were leading a very deeply aligned, moral, integrity-driven life that was true to them, that they were prepared to sacrifice money for the sake of doing things the right way. So in some sense, Charlie would say that everything is one damn relatedness after another. And so you look at investing and you think it's all just about making money, and it's really not, right? It has these implications. How are you going to make money? What are you going to do with the money? Are you going to treat your partners with integrity? Are you going to treat your shareholders with integrity? So it's all related. So it becomes a kind of philosophy of life. And so I think in some ways the book is a sort of, I mean, in some ways it's a kind of stealth spiritual book, but in some ways it's an argument for a kind of enlightened capitalism that's less driven by rapaciousness and selfishness. And what's interesting to me is that when I talk to someone like Charlie Munger, he would say, actually, this isn't naive at all. I mean, I once I was on a Zoom call with Charlie, and I was talking about Monish Pabrai, who he's friends with, and he said, Monish is such a high-quality person, he's so smart, and he's so ethical. But he said, Monish and I don't deserve any credit at all for being so ethical. He said, we know we're going to make more money by being ethical. I thought that's such an interesting insight, that it's not naive to behave decently, because you're actually going to draw higher quality people into your ecosystem. And so you have people trust you, you have people like you. And so for Warren and Charlie, this idea of creating what Charlie called a seamless web of deserved trust was actually a competitive advantage. It wasn't naive. And I think that's really helpful for all of us in the business world to say, well, actually, there is this example of behaving honorably and it working. It actually becomes a competitive advantage to be trusted. And I talked to Tom Gaynor, and Tom said, the key is that what you need to do is you extend trust first, and then you see if the other person honors or violates it. And he said, if they violate it, then you get those people out of your ecosystem. But he said, if they honor it, then you find that increasingly you have this network of relationships that are trust-based with really high-quality people. And that just becomes an enormous competitive advantage in life. So it's really a whole different philosophy for how to do business.
Right, the rule of subtraction, which you just mentioned, is subtract the negative people out of your lives. We always ask our guests for a one investment recommendation for a long-term diversified portfolio. What would yours be?
I think really it is this sense of investing much more deeply in your relationships. That when you look back at the end of your life, you're not going to define whether your life was successful by how many millions or billions you made. It's really going to be driven by how people think about you, the sort of trail of kindness or goodness that you've left. And in some ways, the person that I admire most, who I write about in the epilogue of the book, is this guy Arnold Vandenberg, who's not a particularly famous investor, but just is an extraordinary human being. And he said to me at one point, he said, I could lose all of my money and I would still be rich. And there's an extraordinary moment where he turned to the filing cabinet in his office in Austin, and he had all these letters from people who he had helped over the years. And he just sort of said, you know, whatever happens, I have this, I have these letters. You know, I mean, that's my richness, that's my bank account, as he put it. And so I think for me, it's kind of this great irony that after spending all of these years just trying to get richer, you know, financially, the thing that I've really learned from these guys is, let me try to become richer in terms of relationships, in terms of, you know, my relationship with my wife and my kids and friends, and to apply in doing that Munger's advice, which is to have a good partner, be a good partner. So it's sort of just this sense that I need to show up more. And so I think that turns out to be really the greatest investment, showing up more for your friends, your family, and the like, while also constantly failing and falling short, as I've demonstrated over the years.
William Green, thank you so much for joining us on Wealth Track with your insights about great investors. We really appreciate it.
Thank you. It's a great privilege chatting with you. I really appreciate it.
At the close of every Wealth Track, we try to give you one suggestion to help you build and protect your wealth over the long term. This week's action point comes from William Green. I asked him to recommend an investment book. He chose another route. This week's action point is read Warren Buffett's annual shareholder letters.
I think if you want a really great education both on investing and business, the single greatest and least expensive resource is just to go on Berkshire Hathaway's website. And it has all of Buffett's annual reports going back, I think, to 1995. I can't think of a better grounding in business and investing than reading that. I had a similar feeling this morning when I was reading one of Howard Marks' latest memos from Oaktree. And again, you can go on Oaktree's website and get these unbelievable insights there from one of the great thinkers. And it's extraordinary that this stuff is just lying there in plain sight. And because it's free and readily available, we don't take advantage of it. So really the key is, as Charlie Munger would say, take a simple idea and take it seriously. And so when you see the fact that people like Buffett and Howard Marks have all of these treasures out there available for free, you take it seriously and you really try to internalize this wisdom.
As Green just told us, Buffett's annual reports and letters to shareholders dating back to the 1990s are available to all on Berkshire Hathaway's website. There have been numerous articles and books describing them, but there is nothing like the original source. Have fun. Next week, international investing superstar Mark Yockey discusses the resurgence in overseas markets and where he is investing his award-winning Artisan International Fund. Please follow us on Facebook, X, and our YouTube channel. Thank you for spending time with us. Have a lovely weekend and make the week ahead a healthy, profitable, and productive one.